to all introduce yourselves and your companies and give a quick couple of words about what you're doing and why you're here tonight, and then we'll get busy.
Sure. So Saleem Khan from Dun & Bradstreet. If you're not familiar with us, we're the world's largest commercial database. We keep information on 300 million businesses globally. We're responsible for maintaining identity data as well as reputation data on businesses. And our foray into blockchain is to really think about how do we take that identity data that we have globally, the 300 million businesses, and create a new distribution mechanism for that data. Traditionally, we've done flat files or APIs or products that are web-based. We see blockchain being another distribution mechanism for us to get identity data where it needs to get at a point of transaction.
Evening. First off, wanted to say thank you to Oaklins for sponsoring what we're doing this evening. And secondly, thank you to all of you who are staying in the room even though there are drinks afterwards. You're not wandering back to the bar already, as some people have, it looks like.
You can get a drink and come back, you know.
Makes us more fun.
So I work at IHS Markit. We've been around for 100 plus years, actually a little more than that, Journal of Commerce, Jane's Fighting Ships. You may know us in a variety of ways. The vast majority of the data that we use is used by someone working with you or for you, even though you may not necessarily use our data directly, except for maybe Carfax. It's our only retail brand. But we've been looking at what to do distributed ledger or blockchain space for a couple of years, and did our first proof of concept back in 2015 through 2016, moving credit derivatives onto the blockchain. Sounds kind of esoteric. It was. But the great thing is we proved out that the technology works. We did more volume in a couple of minutes on the blockchain than we usually do in a full month on proprietary channels, which has proved out that everybody was saying that you can't do things quickly, you can't settle transactions, you can't do finance. We proved 3 years ago that you could. And that became the base that the Depository Trust Company, the DTCC, is now using to move their entire mainframe and infrastructure for the golden copy of credit derivatives on behalf of the Treasury onto distributed ledgers. And we're the feed into that program. So we've been at this for a while. We like the space. We think there's a lot out there. We've been trying to be innovative before someone tries to disrupt us.
I think I'm on. Yeah, that's good. My name is Caroline Abenante. I'm the founder of NYIAX. I'm sure you don't know who we are because we're new. We're partnered with the NASDAQ. We took the NASDAQ's platform and adapted it for the buying, selling, and retrading of premium inventory. So we created the first real exchange. Everything else that's seen in the market, you may have heard the acquisition of AppNexus yesterday. Those are all auction-based sites. So we created a true futures and forwards exchange. And we have blockchain as our core ledger for this. We're using a private blockchain for this. It is actually chain. And we are recording all the transactions into the blockchain when the trading is done. And we also can create a secondary market. We're the only other Reg M exchange out of the 14 medallion exchanges that exist because we're a NASDAQ-based exchange. And we've also done a joint patent, and several of them that are coming as well, with NASDAQ for bringing any sort of derivative on exchange. And that's a global patent with them. So I do like your idea about bringing derivatives on, because that is actually a goal for all of us.
Sharma, I'm the co-founder and CEO of HealthWizz. We are right at the intersection of healthcare and blockchain. And what we're doing, and I'll kind of explain it in 3 steps, but step 1 is we are providing tools to consumers to aggregate their medical records from different sources. We all know our medical records are scattered all over the place. Hospitals, doctors' offices, wearables, as well as our genetic information. So we are providing tools that essentially live on your phones, on your cell phones. You aggregate your medical records, that's step 1. Then our application essentially normalizes the data, standardizes the data, and preps it so that as a consumer, you have choice of who you want to share the data with. Whether you want to monetize that data, you can do that. And again, that's part of the prepping so that you can bundle it in ways that if Pfizer or Merck wants to buy the data from you, they can come to you and buy that data directly. So why do we use blockchain in all of this? So there are 2 or 3 really interesting qualities of blockchain that are very attractive and applicable to what we are doing. So one of them is creating a marketplace. And this marketplace that we are creating is a peer-to-peer marketplace with no intermediaries in between. So if Pfizer or Merck or NIH or whoever is doing clinical research trial and wants to buy data or wants you to participate in that clinical trial, we want that to be part of a smart contract that lives on Ethereum blockchain, and you become part of that smart contract and essentially do your transactions, get paid for your data. We have our own token, which essentially mirrors rewards points. So if you sell your data, if you participate in a clinical trial, you get rewarded with this token. It's called OHM points. And the other quality of blockchain that's really interesting for us is provenance. So why would Pfizer or anybody else believe that this data is a copy of what you downloaded from a hospital or a doctor's office and that you didn't tamper with it? So one of the qualities of blockchain is provenance. So we use blockchain to verify the provenance of the data that was downloaded from a hospital or a doctor's office. And again, it's a peer-to-peer transaction. We essentially want to change how data is sold today. When you sell your house, you keep 94% of the proceeds. 6% is taken by the broker. Data is the only category that I know of where 100% of the proceeds go to the intermediaries. And today, in healthcare, there are data brokers who are selling our data and keeping 100% of the proceeds. That's what we want to change using blockchain. And that's why we use a public Ethereum network or blockchain, because again, when you are selling it or targeting consumers, you can't use a private permission blockchain. And that's the reason why we are using a public Ethereum blockchain to do this.
So let's start. So I'm just sitting here, literally, I had like 3 or 4 different ideas of things I wanted to talk about. But let's start with, because one thing I think is interesting, and Christine, I think I want to start with you on this. I'm sorry, I don't know why I said Christine, Carolina. Talk to me a minute about the capital markets and how this technology will change them. Because I think it's interesting. I mean, the whole point of the capital markets always is to efficiently move capital. And when you talk about M&A, you're talking about how can you take, excess capital and move it to where it can do some productive good. How is this changing?
I think both Jeff and I can talk about that.
Obviously.
Why? Because we're partnered with NASDAQ. NASDAQ in 2016 asked us to be the first case with chain for the blockchain. And they wanted us to record the transaction in the blockchain, also keep the title of provenance, which is what you were talking about, and deal with all the data that comes in, all the subsequent contracts, any kind of other information, as well as utilization of smart contracts in that methodology. Where it works, it can work on 2 ends. The front end is very hard for the capital markets because of the speed limitations. Even in a private blockchain, the speed limitation has some effect on how quickly they build the blocks. They can do batching, which is after the trades are done, place in at a certain time frame and place that into the block. But what they want to do is on transaction, and they're looking towards creating that in the front. But where you're seeing most of the work done is in actually the clearing section of this. So what the hope is to get to T0. That is trade at 0. Right now, typically we're doing T2 to T3, 2 days after trade to 3 days after trade, and that's what DTCC, as you said, and they're right in New Jersey, works on. So for a clearing mechanism in that light, we're trying to get to the notion of T0. If we can get to a notion of T0, we free up so much more money into the capital markets that can be reinvested very quickly. And since you are also working with DTCC, I would say, if you agree with that.
Yeah, I do. I think, though, the difference between the wholesale and retail markets. There's a huge difference between how proprietary traders, if folks might look at transactions, whether you're trading government bonds on size or trading any other type of instrument. How many people in this room have always bought stock after they sold stock? Whereas how many people have decided, I want to buy something and then I'll figure out how I want to fund it. I want to buy something and once I buy it, I want to figure out what I'm going to sell in order to pay for it. Because if you're T0, if you're instant settlement, if you're real time, then you have to have cash in your account sitting there before you can do the next transaction, which means you have money sitting there wasting away, not earning interest, not being productive for you. So if we're going to move to T0 and we're going to turn everything over and upside down from how retail today trades, we need to make sure that everybody's ready to do that. Not all the systems are capable of handling that. Most people's heads aren't capable of handling that, right? So you also have to think, I want my bonds to mature and then I'll invest in the next thing. I want the stock to mature. I want to invest in an ETF, whatever it might be. So we can adopt the new technologies that are available. We need to understand what the implications are across the board for how that's going to change how people think and how they act. In the wholesale market, on a post-trade basis, things are very efficient, things are very easy. They can take an extra second or two, it won't matter. And if you look at the volume of bids and offers that are out there for any given instrument, rather than the number of things that trade, it could be there's 1,000 bids and offers for every trade or 100,000 bids and offers, like for equity options, before there's a trade. Volume, like the bids and offers, probably are not suitable for distributed ledgers today. But that 1 in 100,000 option trades, yes, that can be done that way and should be.
Let's talk about this. Saleem and Raj, I want to get both of you in on this for a second. Let's talk about this whole idea of the difference of handling data. And one thing I think is interesting, Raj, is I think everyone knows that they have a ton of data related to their health sitting in files somewhere, but I don't think we've ever really had a concept that we could own it or use it. Talk to me for a second just about sort of the cultural challenges of implementing these kinds of technologies.
Yeah, I think from our perspective, it is a little bit of a cultural change from the perspective of we've been a centralized company, meaning we're a clearinghouse. We take in data from multiple sources and essentially distribute that back for our customers. What blockchain is introducing is more of a peer-to-peer mechanism, right? So there is more self-sovereign data being created. Now, granted, that's data coming from one source, one single individual or one company telling you about itself. That's not the same as a verified company that has multiple sources of data coming in to prove their identity. So we think one of the things culturally that is happening is there's a push towards peer-to-peer, but I think what also needs to be remembered is that you still need, if you're looking to trust the identity of an individual that you're sending money to or trying to do a clearance on a trade, you need a vetted third party that is confirming that that counterparty is who they say they are, right? So blockchain brings you so far in terms of self-sovereign identity, but you still need some sort of clearinghouse to go out and check and make sure that this business is registered in that country and is supposed to be able to operate there. Someone needs to bridge that physical and digital divide, right? Without going there and checking the site and making sure that the business is actually operating at that location, you don't have that physical and digital piece together. You get garbage into your blockchain, and you don't necessarily have good identity data on the blockchain if it's just single-sourced. So culturally, I think there's a bit of a shift towards peer-to-peer, but I think there's a happy medium between the peer-to-peer and this centralized mechanism.
And I think when it comes to health data, it's true this is going to be a pretty big cultural shift, but I think there are some good indicators that we have seen in other sort of parallel industries. So as long as we can get people to think about their health data as a digital asset that has value, and we can have people think that that can be monetized. For instance, today, we as individuals really are the only ones who can really aggregate our data. So think about it. Your hospital has data, health data on you, which is clinical. They don't have what you have on your wearable. They don't have most likely they won't have your genetic information either. They don't have your environmental, social data either. You are the only one who can actually aggregate this data. And think about it, when it comes to precision medicine, if you are the one who has your genetic data, your clinical data, your wearable data, your environmental data, how valuable that is. And then when you have that car payment coming up and somebody is willing to pay you $500 because you now have this incredible, valuable data that has genetic information as well as other information, maybe you'll start thinking about it as a digital asset that has value, which you can monetize yourself.
There's another aspect to that, which is that your identity itself has value. And one of the things the UN's working on is using digital identities. So when people come across as refugees and their passports get lost or things happen, in order to identify who's who in a positive way. So firms do it through KYC, FATCA, AML, as you were mentioning before, so that they can affirm who they're dealing with, so they don't work with sanctions and other problems. But people can do it as well. And you can register your kids, or you can register other people as well.
Let's talk a little bit about how you navigate this entire space, a space that is moving at such a rapid pace. So many things are changing, a lot of hype, a lot of promises. Sometimes things don't work out. And I want to start off with the startups. How do you guys operate in this sector where so much can really turn chaotic in a market that I have to point out to people is 24/7? Does not shut down ever. There's no closing bell on the crypto markets. How do you navigate this sector?
Well, we were very lucky to be partnered with NASDAQ. And since NASDAQ's been using blockchain and have been experimenting with blockchain since 2014, they actually helped us considerably in it. And since our methodology is bringing financial rigor into the advertising ecosystem and also all of media, it's a very different, much more mature approach. So we use this idea that we want to walk before we can run. So how we look at blockchain is we want to use it as our core ledger. What can we really do with it at this point in time in contract management? We are using it to look at each trade, any changes to the trade, how we're recording it, the data that we can bring from all of these contracts, as well as smart contracts to self-effectuate the reconciliation of the contract and also the distribution of funds. And then work with other people for rails between exchanges and other areas. So trying to create a common data dictionary and creating an overall taxonomic structure for the industry so that chains where there will be other exchanges that will be created eventually, that's the hope, that they can talk to one another and you can have the best pricing systems that don't exist in our industry at this point in time.
How did you end up with NASDAQ?
Oh, well, that's easy. We had Tom O'Neill, and he was on the board of NASDAQ for 15 years.
Okay, good answer.
Who do you know?
So I'll answer the question from two perspectives. One is the choice of technology that we made, given that it's changing so fast. So we have a fundamental belief that that blockchain will be public, and private the discussion that we have today, for example, between public and private blockchain will sort of converge, and I'm sure it reminds some of you, as it reminds me, of the intranet and internet days. Eventually, now there's only one internet, and I think that's the way this industry will go as well. So we made a choice early on to use a public Ethereum blockchain. Number one, we think that over time everything will become public. But number two is that this change that we are talking about is going to be organic. It's not going to come from enterprises and institutions. In fact, blockchain is all about decentralization and decentralization of trust. And what are enterprises? They are essentially central entities that perform some trusted role. So that's the reason why we made those choices. From a financial perspective and funding perspective, there's a lot of turmoil. In fact, we were on our way to doing an ICO. We pulled back because of all the noise that was coming from SEC. They subpoenaed 80 companies. I think they were telling us not to do an ICO.
125 now.
Now 125, so I think they were telling us not to do an ICO when they did that. But we are pursuing, we do have a private placement, Reg D in place, and we use that to raise money. We will also offer a security token, which we'll register with the SEC and do a Reg A plus kind of an offering. So yeah, and that has actually been pretty challenging, given that space, the funding moves very rapidly in one direction or the other, and we have to kind of dance with that.
Okay, I definitely want to get you guys in, but you have to talk about that a little more, because you were right at the heart of what you're going to do an ICO, you're going private. Talk to us a little bit more about that. What were VCs telling you? What were you guys thinking? At one point it seemed really easy to raise a lot of money with an ICO. Just run us through it. Give us a little more detail on that.
So this was summer of 2017. We had all our ducks lined up, compared to what other companies were doing in terms of doing an ICO. Our white paper was there. We had, one of the best law firms doing our legal paperwork. So we started with something called Reg D, which was for accredited investors to invest. And the idea was that there is this agreement called SAFT, Simple Agreement for Future Tokens, so that whatever they put in as accredited investors would get converted into tokens. Now, we actually didn't do a SAFT, we were about to. Instead, we ended up doing a SAFE, a Simple Agreement for Future Equity. And I think that saved us a lot of hassles, if I look back at that. So we pulled back, we did a SAFE, and that's how we were raising money. We still needed a token in order to create this network effect to what we were doing. We wanted our consumers to get reward points if they are going to share their data or if they are going to participate in any kind of clinical trial. So we did need a token, a utility token. So that's what we ended up introducing. The original token that we were planning to issue as part of the ICO, we pulled back, but that's the token that we will eventually offer as long as there are secondary markets where people can trade that token. And I think those are also in the works, being filed with the SEC. So, we are essentially at this point waiting for by the way, the pipeline is full. The SEC, a lot of companies like us are trying to go the securities token route. I have filed with the SEC. Not one of them have come out, but we think that they will over the next few months. And as soon as one or two get out of the gate, we want to do the same thing and do a securities token offering.
I can talk a little bit about the securities token offering piece, because I sit on the Chamber of Digital Commerce, and I think a lot of us do. But I also sit on the Smart Contracts Alliance as well as the securities area. There are really only 15 people that have filed. There are 10Ks and 10Qs. And there's almost nobody in any of the other, there's 12 of them. There's one in advertising. The exchanges that exist right now. NASDAQ owns 6 medallions. And between ICE and NYSE, there's another 5. So there's not that many out there. So if you're looking at that retail market, there's nobody.
No, Perry Ann does a good job with the Chamber of Digital Commerce, and the U.S. is sent her overseas to talk to some folks as well. But let's not be myopic about this being just a U.S. effort and the ability to trade here. It's a global environment. Firms are looking for funds globally. Retail's looking for ways to invest globally. And there's lots of other countries that are more hospitable than folks here may be. And capital's going to chase the availability, wherever it may be.
There's also, just to add to that, and I think there was someone brought up a point about some island using some cryptocurrency as their currency. Marshall Islands, right. Japan also famously, I think about a year ago or a year and a half ago, started using Ripple as a reserve currency. So they're actually one of the first countries to do something like that. But it's a very small amount of how much reserve they have. But there are countries that are more conducive to ICOs, more conducive to some of the coins, the utility coins, and all the different sort of coins out there. But there are regimes, I think, that are on one end of the spectrum with respect to being open to this sort of thing, and then others that are much more closed and just don't even have legislation. I don't even think at a federal level in the U.S. there is federal legislation. A lot of it is being driven by the states and by the local governments. So.
You can't have there's something called preemptive rights that exist, and we're talking about securities. Preemptive rights have existed by the federal government. That means that they take the field, and the state can't do anything about that. In the idea of whether, I'm a securities attorney, that's why, yeah, so whether you're talking about something in that regard, if they can start making exchange for an ICO, they can't.
And there's other ways to approach this as well. Singapore did an experiment where they have a fiat currency, and they have a digital version of it, transferable one-to-one on an equivalent basis. That's worked out well. Canada's looked at that. Other people are trying to figure out how best to take advantage of what digital offers, what crypto offers, without having any of the risks inherent by having multiple currencies.
We're going to get to Q&A in a couple of minutes. So I just want to get from Saleem and Jeff, what is the M&A picture in this sector from large established companies. What do you guys, how do you guys view, to the extent that you can talk for your companies, I understand the, some
Yeah,
limitations, but.
Sure. So from our perspective, we've been investing more internally to build up staff internally. So we have been making hires more to bring in blockchain expertise and to really build up a practice around what our strategy should be in this space. A lot of it is what I described earlier. It's really around identity management and master data management and building out blockchain systems that can, kind of distribute our data in that way. But mainly it's been looking at hires. We have been monitoring the space quite a bit to look for complementary capabilities. So anyone in the space of self-sovereign identities, many of them are more consumer-facing, not necessarily B2B or corporate to corporate sort of identity providers, but anything in that space we are actively monitoring. And also looking at interesting companies that are doing digital rights management, similar to, I think, what NYIAX is doing with an ad exchange, right? I think those pose some very interesting investment opportunities for a company like ours to be able to partner with someone who's creating an ecosystem and be able to kind of distribute our content that way along with this self-sovereign identity piece.
And we've been trying to figure out what the best way is to approach the market. We've looked around for quite a period of time. We've looked at investing with a number of the firms that we work very closely with and have chosen not to, just so we can take an honest evaluation of the value of the software that they bring to the table without being conflicted by having an investment in those firms. And we look to do the investment separately, although strategic investing is something that's of value to us. We want to be very cautious about it. By the same token, we want to enable others to do investments across the board. We created a program called Stacks that leverages our loan program and moving away from having multiple payments made through the FedWire system and moving instead to our own token that's one-to-one with dollars or euros or yen. It facilitates payments outside of when the normal wires are available, nights, weekends, et cetera, but also simplifies payments and nets everything down through a trust bank. So there's multiple ways to take advantage of that. Like you, we're looking at investing in our staff. To us, technology, software, databases, we've done this and done this well for quite a long period of time. This is just another wave of that. And yes, there's some folks out there doing fantastic stuff. We can leverage them by partnering with them. And when the time is right, we'll invest in the folks that we need to.
Yeah, that's been the big thing for us is partnerships. I think there are a lot of startups that are very interested in companies that have data moats, right? To be able to kind of start democratizing some of that data in new and interesting ways. And so I think partnership and alliances is a big part for us is to look at that space and not necessarily look to jump in with a full acquisition or a full acqui-hire at this point.
You said by the same token, was that pun intended?
I was hoping somebody would get it.
I got it.
Gotta liven this place up a little bit.
All right, let's take some questions. You guys have questions. It's an AMA session right now, so you can ask anything. Ask me anything. Somebody.
12 steps.
Yes. I'm sorry.
Impact to GDP. So I think the question is there any impact for GDPR? Yes, I think so. I think if anything, blockchain might help with some of that. I think you get the ability to kind of geofence and understand from a digital rights management standpoint how data is being used. So I think it's a matter of creating a construct on top of some of the technology as well as using smart contracts to do it. But I think GDPR can be addressed using some of this technology. We haven't necessarily gone down that route just yet, but I think there are companies doing that.
Sorry. Microsoft is doing quite a lot in this area. They've moved forward more than anybody that I have seen with the GDPR, and they're partnering with a lot of other companies, smaller companies, that actually give the rights for the GDPR piece. And then in their internal system, because they also work with a company called mParity on how it works in the whole ecosystem of Microsoft. And Google's working on something that's companion to that as well. And they've done an excellent, excellent job that I've seen.
Yeah, because on the surface, you would think there would be a huge conflict. On one hand, we have an immutable blockchain where you can't take data off and you can't change what's on it. And then GDPR says, whenever I want, I take my data away. So the firms that are working this out are actually working to good advantage. It'll be very interesting to see how it all comes.
Yes, sir. Questions?
Given that I presume what you're producing is essentially a
So that's a great question. The question is, this could be, and by the way, this is probably true for a lot of other blockchain companies as well that get started. If we are successful, then the network effect takes effect, and then we can pretty much step out, and the things will continue. So we ourselves could be disintermediated very, very quickly, right? So and the utility token that we have doesn't have a finite number, so it doesn't appreciate in value. It's not an investment vehicle, so and quite honestly, we really haven't thought about the business model. We think that by matchmaking, bringing the clinical trials companies and clinical research companies together with people who want to participate in those or sell their data, we can play the role of a data broker and charge a small fee, not 100%, but 6%, like I was talking about earlier. I think that's our business model, and we feel comfortable that if we do that, it's a solid business that can grow well. So from an M&A perspective, that's the revenue stream that people will look at, and that's what they're buying essentially. Now, does this mean that other people can't write smart contracts and target the same users that we are targeting? Of course they can. I think the fact that we are doing it, and we probably have more visibility into the user base that came on board will probably give us an advantage. Not a huge one, but anybody could come in and advertise to our users saying, hey, there is a clinical trial you want to participate in, we'll reward you with something, and our users could go there. So yeah, and I think to a certain extent it keeps us honest, because that's the competition that will come in, and we are going to be focused on growing our top line, which is through this matchmaking with pharma and users.
Yes, sir.
I have a two-part question. So in some ways, if you think about where blockchain is today, it kind of reminds me of 1997, 1998. And with every new technology, there's a mania, and then there's dissolution, right? So as someone who's wondering whether to invest in this space, how do we think about what that dissolution phase might look like over the next 12 months, 24 months, 3 years, 5 years? Number, that's the first part of the question. And the second part of the question is that when I think about decentralization of trusted transactions, that's what blockchain is, right? You're talking about something that's potentially extremely disruptive. Right? When I think about my relationship and the millions of people that have relationships with a big bank, right? It's because you trust the bank to protect you and protect your transaction activity. And what you're saying with Bitcoin is that all gets decentralized. So if blockchain becomes Amazon 20 years from now, what's in the crosshairs of that? What potentially gets disrupted by this?
I think for the first part, I'd say, you look at a company like Coinbase, right, which has created an ecosystem and a marketplace for buying and selling digital currencies. That is a model that's going to be around 2, 3, 5 years from now, right? It's essentially a brokerage is what they've created. I think finding companies like that, I think those will have a little bit more longevity. And I think also to your point on disintermediating trust, look, so blockchain is a technology that can be used to trust that if I send you Bitcoin or Ethereum, it'll get to you. But the issue of trust in a banking and regulated environment is that I don't know if you are who you say you are, right? So one issue there with decentralization is making sure the identity information is correct and that it's valid and it's been validated by someone, right? You can't just willy-nilly be sending to anyone. So I think one part to the adoption here and to the use of it is making sure that you've got identity data that's verified so that you're not completely decentralizing trust from the perspective of who you're dealing with. You're decentralizing the fact that I could send something to you and I can guarantee it'll get to you, but making sure that it actually is going to the person that needs to get it, that's the important thing that I think we need to infuse in to have some central control over this decentralized ecosystem.
I would say if you're talking about, it's interesting because a lot of people say that, oh, this is like the dot-com era. In terms of the hype cycle, and maybe even in terms of the investment cycle, it's a lot like 97, 98. In terms of the actual development of the technology, I think it's much earlier. I think you are in the late 80s at least, if you're comparing this to the internet. You know, the internet was 1969. It was invented by a bunch of guys in a lab. 10 years later was 1979. How many of us had heard of the internet in 1979? None of us. This has been a little more accelerated, but the technology itself is still very nascent, and that means that it's really hard to figure out who's going to win and who's going to lose.
Capital's a bit more at risk.
Well, yeah, look, I mean, yes, you're taking a bigger risk. You're probably going to have a bigger, maybe reward if it works
Yeah.
out. And you talk about a downtime. We've already gone through a couple of them in Bitcoin. Bitcoin goes through those like potato chips. I mean, it happens. And I remember in like 2015, right? In 2015, Bitcoin really fell off the planet. And everyone talks about Coinbase now, and everyone talks about Ripple. I can remember having a meeting with some executives at Ripple, and they went through their latest pivot of the technology. And I thought, ooh, that doesn't sound good. That sounds like what they're doing wasn't working, and now they're in trouble, and they're trying to, you know. And I think that was true. But then they came back. Coinbase stayed steady, came back.
Yeah.
Circle, I think, the Circle kind of, you know, fell off the radar, lucked into the over-the-counter market, and now Circle's huge again. So it's really hard to predict where all of this is going. Carolina, you're shaking your head.
Well, I totally agree with you. But I also think when you're looking at anything, you have to see if they have a model that can make something happen within the near term, within the first 12 to 24 months. So if their model is something that is attainable and it's not using the blockchain to try to solve all the world's problems, then you're looking at something that you possibly can have something that would work and has either an acquisition idea, it could have an IPO, or it can have even just more investment and growth.
And I would leverage on top of that smart contracts, which enable you to put a piece of software on the chain that you know that if certain things occur, other things will happen. But in order for those to work, you need an oracle. You need someone that you can both trust to decide whether the event took place or not. If you're doing an option, did it actually hit that price? If it's an insurance contract, did that event take place? If it's a purchase, did the title transfer? Someone has to actually stand up there and say yes or no, it did or it didn't. So we talk about having all this distributed, we're talking about having nobody in charge, but we still need to look to some people who we all trust. Without that trust, without some trust in there someplace, it all falls apart.
More questions? I know you guys want to get to the drinks and the dinner. And the books, don't forget the books. Oh, right here, yes, sir.
All right, so this may be an obvious one, and then it will be one I will not have to leave confused about, so that would be good. I'm thinking about privacy and security. I'm thinking about, for example, health records. To me, there's something kind of soothing about the fact that all my various providers and people don't talk to each other. So if you wanted to kind of unwind what my health records were, you have to go a couple places and they don't talk to each other. So it's essentially already distributed. Sloppy, but distributed. Once you put it all together in blockchain, isn't there some dystopian future where there's a security breach and all this information someone finds a way into? Well, don't say yes.
I'll say no. I'll say no. No, and here, so, in our case, for instance, the data, the health data, never actually gets on blockchain. I didn't mention that earlier, but it's really the transaction and the fact that I gave permission to someone to access my data, and I got a reward for that. That's what gets registered and logged on the blockchain. How I actually ship my data to that buyer is a separate channel. It's not blockchain, right? So, and that's a secure, a separate channel between me as a individual that is selling the data and somebody who's buying the data. So, from that perspective, it's actually much more secure because the hackers, it's not attractive for hackers to hack individuals' health data. It is much, much more attractive to go after places where there are honeypots of health data, and it is very valuable. So those are the ones that are attractive for hackers, not something that's on your phone, right? And this kind of brings back to one of the things that we have had to deal with. So we let the user store their addresses, private and public keys on their phones. That is really, really challenging. So from a adoption standpoint, for the user to create a seed phrase of 12 words and then enter that and configure a wallet. I think it's a demographic question. People under 30 can do it like that. Older people will have a hard time, and that's where the adoption curve, I think, is going to take time. But those are some of the things that we are dealing with right now is how can we make this digital wallet that people have on their phone as easy as possible. Now, Coinbase has made it really easy, but guess what? They are storing your keys on their servers, right? So you are essentially trusting them. If you are going to create a decentralized network, then you want the keys to be on your phone. And again, the hackers are going to find it really unattractive to hack your wallet or your health data that's on your phone. If it's in a central place, they'll go for it.
The other thing to consider is who has a node on the network and what rights people with those nodes have. So for example, one of the things that we've done in some of our pilots is regulators have interest in looking at the data sets. Instead of traders sending them reports episodically or when they're requested by the regulator can reach out whenever they want, bring in data, whatever they're entitled to. It may be transaction data, it may be size, time, price, et cetera. They can interrogate the data without you actually knowing that they've come in and taken it, because they have the rights on the chain to see more than someone who's just looking at it from afar. So the data is there. The question is who has the key, public and private key, and what rights those nodes have. But once the data is there, someone with rights or someone who obtains them can get that data.
I think we have time for one more, if it's relatively quick, and we'll let one person answer. All right, yes?
I just want to know, because right now all this concept is still pretty new, there's not much government policy for that. What if the government changed their viewpoint or the policies towards this overall concept?
Anybody
What sense do you mean changing the policies?
What policy?
Which policies? Because right now, I think we're all working within the government policy. He's working under HIPAA laws, which is the Healthcare Portability Act, which is your own data. We're working in the framework of the SEC and also GDPR. I think all of us are working within the framework of today's regulatory environment, which is no different than if it would be on-chain or off-chain. So, but if we're talking about ICOs, that would be different, and none of us are doing ICOs.
I think the other thing to consider as well is in the US, we've got a spaghetti system of state regulation, insurance regulators, state banking regulators, CFTC, SEC, Treasury, and they all, OCC, and they all have different ideas about what you can and can't do. If you go to England with just the FCA, you go to Paris, you go to Singapore, there's a single regulator that works with the industry to construct regulations to enable growth and investment. So one of the things that we talk about by changing regulation is actually having regulation. I mean, the IRS definition of some of these things is very different than the Treasury's definition. You're only going to lose. There are places that are more hospitable, which is a problem.